Long-term price trend for gold has been going up. I don't think anything's really changed there, but the short-term trend, well, that looks a little bit different. Could be going the other way. We're going to talk about how to take advantage of that. Maybe pick up a little bit more loot. I just made a short video showing 55 ounces of gold. At the beginning of the day, when I posted that video, the gold was worth $100,000. And actually, it was worth $101,750. And I know this because I was calculating it out based on spot price to show how many ounces it would take to reach 100,000. And 54 was $100 short. That's where that 55th ounce came in. Now, I get that a video like that, it's going to hit some people wrong. Hopefully not, because a guy with a YouTube channel focused on gold can bring together 55 ounces of the stuff. That shouldn't really be any kind of shock. But because I was showing it in terms of cash value, well, somehow that changes whether or not it's polite to show it. But let's come back to that. The reason I bring this up is that by the end of the day, that stack of gold was no longer worth $100,000. Gold lost about 2% in yesterday's trading. Friday, it could get even worse. We see new U.S. non-farm payroll data, and if the numbers come in stronger than expected again, well, the price of gold will most likely take another hit, just like we saw last month. Even though most of the people paying attention saw the data for what it really was, we still saw the price of gold drop. And if that happens again, well, this week will be a pile-on, because we just heard Jerome Powell say that the Fed is prepared to raise rates. Now, reading between the lines, a lot of people think that what he's saying there is they're prepared to go to 50 basis points again, up from February's 25. So just slow this down for a minute. We're in a really strange place right now for gold price. The strength of the US dollar has a direct relationship to gold in two ways. First is based on the Fed's policies driving up the benchmark rate. That drives yields on interest-bearing accounts, and those compete with gold as a place to park money. And the second is based on the value of gold in other currencies. Gold is US dollar denominated. So if the dollar is strong, then gold is more expensive in other currencies, and that reduces demand for gold as the translated cost increases. But it's also just a little bit strange that we're watching these other things as markers for how valuable our gold is to begin with, when most of us probably aren't looking to sell it anytime soon. Now, I get it. But the only thing these moves are a good indication of is how much we're paying for the next few purchases. It has very little to do with the long-term value. And paying less now actually puts us further ahead over the long term. The physical gold is not a trade, it's a hold. So let's look at some other markets, look at equities, crypto, whatever. Your clear goal there is to buy low and sell high. Now, nobody knows the highs or lows except in terms of historical charting. So we know only if we're looking backwards. So it's hard to consistently get it right over the short term. But if you looked into trading algorithms, you'd see an interesting pattern. The algorithms sell on the way up after they've reached a percentage gain in value. And then they begin buying on the way down after some percentage loss in value. Now, this seems counterintuitive, because selling on the way up, that feels like you're giving up gains, and then buying on the way down, well, that feels like you're getting in on a loser. And depending on where you're at on those curves, you might be doing both. Now, there's a lot more going on with trading strategies, more than I should try to explain here, but we're talking in general terms. Hopefully you came in at the right time, you're selling on the way up. That means that you're taking profit. And then hopefully buying on the way down, well, that means that you're getting back in at lows. Now, where this comes back to gold accumulating weight and doing it in 2023 is to say that falling spot price is not a bad thing when it means that you're paying less to buy what you would have been buying anyway. And on top of that, like I mentioned earlier, none of us know where the tops are, where the bottoms are. So maybe our goal is not to hit the bottom of the dip. Maybe it's just simply to buy on the way down. Well, that's easier to spot. Trading algorithms would have a pretty hard time making a profit on 1 or 2% swings like we see with gold. And I doubt a human would have much luck either. We're looking at longer trends. Now, again, most of us don't see physical gold or silver as a trade, but if we take away one thing, it would be that part about the potential benefit of buying on the way down rather than on the way up. At least if we're buying an asset that goes up over the long term, which gold has proven to do. And the way to do that without getting too far into analysis is just to pick a number, a certain percentage drop, watch for that, and move in when it hits. For me, I have two numbers, 10% drop and 15% drop, and anything less than 10%, well, that's a price fluctuation that really won't have much to do with the long-term value of what I'm buying. The best I can hope for there is that I'm just saving a little bit on each purchase. So to explain that plan a little bit, if we do see a 10% drop from a local high, I buy more. If we see a 15% drop, then I buy as much as I can at the time. The local high right now would be a little bit lower than 1950, so I'm watching for 1750. That's a 10% drop. Until I see that, I'm being pretty patient. A 15% drop would be more like 1650. If we saw a drop like that, then I would buy more. That's how that plan works for me. Now that doesn't mean that I'm expecting those numbers, it just means that I change gears if we see them. I mentioned that I'm a little bit past my running goal right now. That's important because that lets me be more patient. I'll still buy regularly, I just won't be buying a lot. Now back to the video where I showed $100,000 in gold and whether or not it's polite to do that. I'm serious about buying this stuff. I think it would give the wrong impression if I hid that. I've been at this for 15 years and anyone who sticks to any plan similar to this, they're going to add to their pile in that amount of time. And that should be encouraging, nothing else. But the thing that I did differently in that video was assigning it a cash value based on today's spot price. Something that's not completely relevant to me since I won't be selling it anytime soon, but YouTube is showing those short form videos to wider audiences. And that's why I added that dollar value hook. That made it feel a little bit funny to me, but it is what it is. I have to get over modesty to have a channel like this. It's not about what I have, it's about how and why. I'm showing things that I came around to and what that's grown into. The bigger issue here is probably the OPSEC angle, and that'll be a topic for another day. So let's call it good there. Let us know what you're up to in the comments, whether you're buying on the current downtrend, waiting on lower numbers. Hit us up, let us know. And then while you're in the comments, be sure to hit that like button. Make sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.